back in February when both LinkedIn and Tableau software imploded on the same day, causing tremendous collateral damage in previously beloved tech cohorts, including everything related to social, mobile, the cloud, and big data analytics. Well, one of the stocks that got obliterated that day fit all those depictions. It was Splunk, SPLK. That's a leading analytics play. Splunk's operational intelligence platform helps to make machine data more accessible, useful, and valuable for their enterprise clients. Plus, the company offers the same software via the cloud, and they've got a cybersecurity kicker to boot. Now, after LinkedIn and Tableau reported those dismal numbers in February, Splunk stocks plunged from $47 down to $30 in merely a week. But since then, things have really changed, and it's looked more and more like tech has gotten its groove back. Not only did LinkedIn catch that huge bid from Microsoft earlier this week, we've seen Splunk stock racket all the way back to 57, meaning you got a 90% gain if you bought in February lows. In fact, Splunk has been absolutely on fire, in part because the company just reported and just keeps reporting, frankly, fabulous numbers. The last time we heard from them was a few weeks ago. Splunk posted dramatically higher than expected revenue, up 48% year over year, including a 40.5% increase in licensing revenue, selling their platform, and a 57.9% gain in maintenance and service revenue, which includes the cloud part of the business. And while the company's not yet profitable because it's spending more money in order to grow, what you got to watch is the free cash flow. And that was up 44% versus last year. Even better, management raised the full-year guidance. So let's take a closer look with Doug Merritt, the president and CEO of Splunk, find out more about his company and its prospects. Mr. Merritt, welcome to Mad Money.
Thank you very much, Jim. I'm honored to be here.
Oh, thank you, Doug. Doug, I'm going to get right to it about companies. But first, I go through your most recent conference call. Cisco, Palo Alto Networks, ServiceNow, EMC, NetApp, Google, Microsoft, Accenture. These are all partnered with you. Is there anyone who doesn't partner with Splunk?
You know, there shouldn't be anyone that doesn't partner with us. It's one of the beauties of Splunk. We're a super flexible data layer that can work with non-structured, convoluted data and add value to it. So we're in this enviable position where we get to add value to all different types of technology. And the more types there are and the more convoluted the data, the better it is for Splunk.
Well, this is very unusual. I want all our viewers to know it's very unusual that you can partner with everybody. For instance, one of our absolute favorite companies is Accenture, and on the conference call, you talk about how you're their platform to deliver applications to advances in service delivery. In other words, that people build things on top of Splunk's platform.
Yeah, I was really excited about that relationship. It's been many years at Splunk trying to do some type of big partnership with a global systems integrator. And as we know, Accenture is one of the best brands in the world around that capability. And they're not just building a services practice around us, which is the standard motion for so many of these companies, but they understood the power of Splunk. They understood that if you bake this data layer into their different service offerings, and they're trying to raise margins just like everybody else and get quicker time to value for their customers, that they actually can get an advantage that other SIs might not. So they're literally building applications on top of Splunk to help with data center management and application outsourcing and their cyber defense initiative with Splunk as the brain or the nerve center behind all those different solutions that they're going to market with.
Okay, we have said that we love Accenture. We've tried to explain it, and I think we got some people in it. But now let's talk about a stock that we really like and a company that you're as a partner of yours, Home Depot. So if we don't know that Splunk's a partner, we don't see Splunk anywhere. There's no nameplate that says Splunk. But integral to their customer relations is you, right?
Yeah, we again the nice power of Splunk is we can play in so many different areas within a company. And Home Depot initially brought us in just for some relatively tactical systems management work, just try and keep these applications and systems up for me. And they wound up weaving us into more and more of their data fabric, their data center fabric. And the end result was Splunk actually improved uptime and performance by 40% in what turned out to be a bunch of customer-facing and revenue-generating applications. So they're not a partner in the sense of Accenture or Palo Alto or Cisco or others where they can distribute us, but they're certainly a key partner as far as a customer that's getting value from Splunk.
And we've also, when Domino's reports, which is just such a terrific company, we always say that they're a technology company that delivers pizza. Splunk is integral again into trying to, analyze the orders that are placed?
Yeah, they were way ahead of the curve. They actually started championing this use case within Domino's a few years ago before others thought that you could use Splunk for non-IT related use cases. And a lot like Home Depot, they started pretty simply, just trying to keep the systems up that run the Domino's website and that their customers interact with and get visibility on possible security challenges. But as they interrogated that data, and that's one of those beautiful things that Splunk provides, different people come to that same data with different questions and get wholly different answers. They realized there was a bunch of marketing and customer sentiment data buried within that machine data that their computer systems and firewalls and other devices were spewing into Splunk. And they've wound up using Splunk for a couple years now to understand buying patterns in different sub-geos that are a combination of people coming to their website, activity within their stores, people using mobile apps, and they're doing really dynamic couponing, pricing, and incentives based on trying to optimize or finding new ways to optimize this machine data.
All right, one last question, Doug. I know that when you grow 48%, that's tremendous pressure. I mean, are you at a situation where there's going to be one day, because you're so big, you can't do 48, and Wall Street will understand? And the reason I mentioned this was because your stock got caught up in the vortex of some companies that did slow down. And it was unfair, and it was wrong, but it was a great buying opportunity. But 48% is that hurdle. Is that an impossible long-term hurdle?
Yeah, the law of big numbers will eventually catches up with all companies. And you've even seen phenomenally great companies like Salesforce start to come down into the 30s and upper 20s. So there is a law of physics that eventually catches all of us. But what we still see at Splunk right now, and it's part of what we deal with every end of quarter investor call down, is the total addressable market for what we do is just gigantic. Analysts estimated at 45 to 50 billion. There's a new report that just came out today from an analyst group that sees the big data market as a whole going above 100 billion. So massive opportunity to sell into. And as successful as we've been with some of our top customers, even with our biggest customers, the number of data sources that are being fed into Splunk versus those that could be, as they keep understanding the different use cases that they can get value from Splunk, that we're still at the early stages. So my goal and our entire sales team's goal and our company's goal is to keep relentless focus on going after this total addressable market by serving our customers and ensuring that they keep getting value out of Splunk.
All right, well, you've done a great job, and I think that it is still early innings. I totally concur with you. That's Doug Merge, President and CEO of Splunk. Thank you so much, sir.
Really appreciate it, Jim. Looking forward to seeing you again soon.
You want high growth? These guys have high growth and consistent high growth. Doug Merge, President and CEO of Splunk. Stay with Mad Money. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.